Hello, I hope you guys are doing well. It's me, Adnan Rahman, the market analyst for Errante. In this video, I'll explain you something regarding the upcoming FOMC, outcome and what we can expect from that, and what are the main things we need to focus on. Okay, so this news today, schedule for today is very important because it will entertain us with the dot plot and summary of economic projections. Okay. So now what a dot plot is, I've already explained in today's webinar, in the today's blog post. You can have it over here. It's posted on all of the Errante's social media platforms. You can go over there and read it. It's just a 2-minute read hardly. And then once you're done with it, you will understand what it actually means and what weight it carries for the technical and fundamental trader aspect. Okay, so now let's see what do we know in this FOMC and all that kind of stuff. What are the main things and why we need to focus on this University of Michigan 1-year inflation expectations and the 5-year one. Okay, this is what I'll be touching at the last. So you guys will have a brief grasp of what I'm trying to say. This video won't be more than 10 minutes, but it will carry much information. Okay, I'll start with what do we know from the FOMC. The main thing right now the US is facing is that the growth is going downwards. Okay, and how to find that? I'll, on this page, I'll click over here, the US advanced GDP quarter on quarter. What do we know? That the growth is like, it's going towards the downside aspect as compared to its forecast. Okay. This, this orange color is the forecast value, and this value in the red, it means that it's below the forecast. Okay. The latest print on the January 30, it was also below the forecast, whereas the other trends like this one is green one, that means it's above the forecast. So what we are seeing from the last 2 quarters, okay, the print was below the forecast. Okay, the thing doesn't end over here. What happened latest is that JP Morgan, Goldman, Morgan Stanley and CIBC, all of them have downgraded the forecast even to 1.5% or 1.6%. Okay, now it's on 2.3. They've even gone downwards to 1.5%, and CIBC has clearly stated that this downward movement is due to this trade war pain. Okay, that is what I'm keeping on saying since the start of January, that this is a problem that the markets will face, and now it's facing the heat. Okay, so what do we know? That the GDP story is moving towards the downside. Okay, now when we come towards the rate cut expectations, let's see what the interest rate market is telling us. This is the Federal Reserve forecast. And what do we know? That, there is a downward trajectory in this, in the forecast. Now it's on 4.33%, roundabout on 4.33. Okay, and it will go to like 3.61 or 3.9%. This is a variable value. So it's going down. The previous forecast is the red one. And even now, what happened, why I've shown you this, that the latest forecast has been revised towards the upside. Okay, look at this one. The previous forecast is down in the red color, and the current forecast is revised towards the upside. Now, sorry, I have a bad throat. I'm really sorry. That's one of the reasons I'm not making many videos, because I have a really bad throat. Sorry. Okay, and now when it comes to this image, why I'm sharing you this image is because later on when I'll explain you regarding this US inflation expectations, that is the time when you will have a grasp of this thing. Okay, and now let me show you the basis points of expected change in rates by the year in 2005. Federal Reserve is expecting around 60 or 65%, 60 or 65 basis points of a rate cut this year by the end of 2025. Okay, so this is the maximum they are doing. So 60 or 65 is what they are thinking, and now they have many meetings to come ahead, and now even if they go for a hold now, they can cover up this 65% in the upcoming meetings. If you remember, until the December of the last month, all we saw is, or we were expecting like 6 plus rate cuts. Okay, and now it's only coming towards 2 rate cuts. So what do we know? Most over the the analysts over here, they are expecting 3 rate cuts for this year, and a 65 basis point of a total rate cut for 2025. And now for this current rate cut, what do we know? There is a 2% chance of a cut wherever or however, there is a 98% of chance of a hold. Okay. And now you might understand that this hold of a 98% carries some weight. And what is the reason for that? Because the market is expecting, okay, some, rate hikes, you can say, not hikes, I mean a stable rate, not rate cuts. Okay, now let me take you forward towards this inflation picture, and then you will understand each and everything. When it comes to US CPI, okay, the US CPI, we have seen that from the October 10th was the lowest reading we have got, okay, like since January 2024, and then it has been going upwards in towards an upward trajectory, okay, and even this one, the February 12 reading was above the forecast as well. Okay, and then now we have only one print on the basis of which we can say, okay, that the inflation is getting lower. Okay, so you know very well, Federal Reserve doesn't, focuses on one print. It needs at least three prints or a series of movements in the same direction to make their move. Okay, this is what they do. Okay, now we have only one lower print, okay, as compared to all of this upward trajectory. And then same goes for the core CPI, one lower print, okay, the first one. So what can be assumed is that Federal Reserve may come out and say, okay, man, we have just one print, we'll wait and watch further what happens. Okay, and now when it comes to PCE, the same story repeats over here. We had this upward trajectory and only one print that is below the previous one. Okay, same goes for the PC over here and then the core PCE also. Upward prints, series of upward prints, and then just one lower print. Okay, so what we can expect over here, that the GDP is being revised towards the downside. The PMA numbers are not doing good. Okay, the CPI is elevated towards the upside, but with a moderate single print only that we can see towards the downside. Okay, and if you remember on December meeting, Powell, he said that they are in no hurry to adjust their policy. Okay, so this is something that is itself, it means a whole scenario. Okay, now we have done all of this homework. Okay, what is the main thing that keeps a whole scenario active? Okay, now if I'll come to this US inflation expectations, this is the data, this one, this is the data published by the University of Michigan. Okay, and usually we look at the 1 year inflation expectations and 5 year inflation expectations. Now, what this means is that what is the inflation, expected inflation 1 year from now, and this one means 5 years from now. So you can see now that on the March 1, the 1st of March, we got this reading. The inflation expectations, since this all tariff story and Trump story has unfolded, it's skyrocketing towards the upside. I mean, this is the whole 2024, and before that, now 1 year expectations of the inflation is going to like 4.9%, and the 5 year is going like 3.9%. Sorry. So if okay, what I'm trying to say is right now that, for example, while having this inflation expectations skyrocketing towards the upside, what happens if the, today we have this comments over here that, the Fed will hold, or maybe the Fed gives some dovish comments, okay, and want to go for a rate cut. In that scenario, we have this, while we have this inflation skyrocketing towards the upside, the expectations, okay, so a rate cut can create troubles down the line, say in 6 months. Okay, at that time, what will Powell come out and say that, man, we had miscalculated? Obviously, they won't make that statement. So now, to have a cushion for themselves, they can say, okay, we are going into a data dependent strategy, or there is no rush. That is what he said. There is no rush. Okay. So on the other hand, if he says like, So we can hold for now, and we have some hawkish language, okay, like hawkish stance. By hawkish stance over here I mean that there are upward revisions to growth expectations, or better unemployment rate, and inflation coming into stable area. So in that case, okay, while having that news and this expectations, they can come into a hold scenario. Okay, so keep this in mind. What I'm trying to say right now, a cut over here can create troubles for them right now until this data comes towards the downside. Okay, and then moreover, don't forget this, that right now, if Powell has to make any comments, okay, or Federal Reserve has to make any comments, they cannot take a permanent or a proactive stance right now, because they don't know what is going to happen in terms of trade policies. Okay, because trade policies will obviously affect the overall banking system, okay, and the money flow of the economy. So they don't know, and they cannot make any sentence or any statement right now. So overall, the best case scenario will be a hold scenario, okay, or even some sort of hawkish guidance. A dovish guidance or a dovish cut can create troubles for the market right now. Okay, this is for now. If you have any questions, you can ask me, and so on. I'll be having a WhatsApp group for Errante clients only, and I'll be discussing all the fundamentals over there. You guys can also discuss with me. It will be a WhatsApp group, official one, and we'll be in link. Okay, but it's only for Errante clients. That's it. Okay, have a good day. Thank you.